I'm going to provide some simple technical analysis techniques that you can use in anything. And it's based on patterns, and those are really, really important when you're trading. You can have a trend line or support and resistance area, but you need to know what to do with it in order to construct a good trade, an entry and an exit strategy. I'm going to help with that today. The trade setup, I'm starting with micro futures. So these are longer dated, or a trending market, I should say, because you want to position this trade so that a larger gain, since it's a swing trade, and you don't really have to monitor it so much as you do with a shorter term position. This is a higher probability trade once the trade gets going. The question is whether you're going to stick with it, because the ups and downs, it's not going to go straight up or straight down. It just takes a while to get there. And so I'm going to be talking about an ABCD pattern, and we're using fibs on these. When we talk about ABC, and I'll show you in the next slide here, you want to take that trade within the 23.6, 38.2 Fibonacci extension. That's where it starts. So let me give you an example of this. So this is a Fibonacci retracement. After we go through these slides, I'm going to draw out how to draw out these retracements and extensions. So in this case here, the fib is going from 0 to 100. And what you have to do in this is that you need to get confirmed for a top and get confirmed for a bottom. And the things we do to do that, right? Because obviously if you're just looking at this A to B and you don't have any context after that, you don't know whether this is going to keep going up or it's going to go down. So this is a very typical pattern where the market hits a top, it goes up, it tries to hit the top again, and what happens is it falls. If you're taking a short position, you want to let it fall. This is where you would enter the trade, but I'm not entering this trade here. I'm waiting for the market to go down and not go below the A level. So when the market goes down, I wait until we confirm a bottom. And the way that you confirm a bottom is that you don't want this candle to breach A. It invalidates the trade. You want that candle to hit this area here. It can touch it, but you don't want it breaching, or else it may continue to go down. And so the good part about this is that once it hits this C area here, then it moves up and it moves down. And this is where the sweet spot in this trade is, between the 23.6 and the 38.2 levels of Fibonacci. And then the expectation is that it's going to move up to the 100 level or the 125 level. So that's a perfect entry. And the thing is if it drops below, you have to wait until you have a typical setup like this again. So entry should be at the pullback between the 38.2 and the 23.6 retracement after the C leg is identified. The C leg is basically you're identifying the bottom of this trade. And then entering below 23.6, it's riskier. I mean, you can do it, but it's a riskier trade because you really haven't identified the bottom of the position. And so you actually miss a few points by doing that. However, and I've done it, I try to grab the bottom, and a lot of times it'll go down. But if your stop is at A or just under A, your stop is very limited. There's still a good chance that you can get into that trade. And so after entering the trade, the initial stop loss is set at the support level at A, is what I was saying. And the leg is considered to be wide and used to prevent large losses. Okay. Let's talk about the exit. The profits is established by using the fib extension. You want to take it at the 100 level. Alternatively, what I do too a lot of times is once I hit the 100, it's very typical it'll fall back because a lot of traders are using the same patterns that we are. They'll close out the trade, and that's where you see the position going. If you're in a strong bull market, it'll go down and then it'll go to the 125 level a lot of times, and even to the 161 level if the market is really, really strong. Here is the extension. So we had a retracement first from A, B, C, and at the C level is basically the extension that you want to get. What it is that you have A plus B equals C to D. And typically it's the time goes with it as well within a perfect trade. And obviously you don't get always perfect trades, but if you have a pattern like this and it is continuing to move higher, you want to let it go and let it get to that 100 level. I'm going to give you a different type of technical, all right? And this is called initial balance. So what that means is that you wait for the market in the normal session from 9:30 to 4. And during the first hour, you mark the bottom of where the market is and the top. And it goes from 9:30 to 10:30. So by 10:30, you should have the high and low of the initial balance. A lot of traders use this. And in this case here, you could see here that it broke out, had a false breakout, and it went right back down. It went up, tried to go up again, and then it went down, And that would be a good trade, basically a short to get into, just another way to get in. And then I'm going to talk about how to find a bottom. So here, again, the market broke through the high level and it looked like it was going to keep going, and it didn't. It failed. But again, if you're trading this and you trade the breakout, you put your stop right below this level here and you let it run. And so here it looked like it was going to continue, but it didn't. And it ended up basically being a short again. But again, if you're long and you took this trade, the level that you'd want to stop at is right around here so that you don't lose a lot. Let's talk about finding a bottom. Here's your IB levels. And in this case, it didn't breach right at 1030 and you had a low there. What we want to do is before, so it went down further, now it went up again, and we got this bottom now. So we established a bottom now, and now you wait. Now what happens is we have another bottom tested, it failed, and again, another bottom that's tested and failed again. Now finally, we got a bottom here, right? Let's see, we got a bottom and the market went up, but it didn't take out the low. Now we've got a reversal. So it's a reversal and the market now started going up. So where would you put your stop? You'd put your stop right under the 1196. So basically what I would do is I'd put it at 1190, place that trade in this area here, and your stop would be at 1190. One thing I want to mention here is convergence. And that means that when the market's going down or going up, okay, in this case it's going down, and your RSI is starting to move higher, okay? So that means, what that means is the momentum in this trade is losing, it's losing steam. When you're looking at the market, you can see that this area here is moving the opposite as this one, okay? And that's basically divergence. And it's just another way to confirm that bottom. This trade here, it's now in the 5 minute, the other one was 1 minute. And you can see this is where it stopped. This is where you would get in, and this is where you probably get out. Let's look at this now. Higher lows, a higher low here, but here it starts to go the other way. Okay, and then you have the higher highs as well here. So you have the higher highs. So after that, you have a lower high, and that's where you would get out if you're trading this. So you get in here, and now you see that you have a lower high, and this is where you get out of that trade. And once you start looking at the market and noticing these patterns, they just become very visible to you. Once we write out the fibs, just very, very clear, okay? And that's why pattern trading is so powerful. If you're looking at the chart here, I mean, the first thing I look at on this chart is this divergence at this lower area right here. It tells me that momentum is probably gone, and this may be a bottom. But however, let's confirm that with using a fib. So here we have A to B, and then we have a congestion point here, and you want to take that. It's either here or basically here, the high point of this area here, and this is your B area, and now our C area. So you can see again here we have A to B, B to C, and then your C to D is the same distance as A to B, C to D. And so where would you put on this trade after it goes up, it goes down, doesn't take out the bottom, and that's where you'd put on that trade, where you'd have a higher low. And then you can see here again, let's see, yes, you're going to see the divergence right here. So now when we put on a fib extension, you're going from the most recent low, which is here, to the most recent high. And this is your A, that's your B, and now we have a C right here. As long as it's confirmed, it could have gone lower, but we had high low, and this is where you would enter the trade. Your D area is to the 100 area here. So, and it hasn't made it there, but that's where your target is to close the trade. And so when I trade futures, this is basically all I do. I look at it, I look for that pattern in the AB area up to C, to C. When we see that lower high, this is where you get in, and you put your stop. I mean, technically, you'd put your stop at the A area, But in this case, since the A area is so far from the C, I would put my stop in this area here because I could have had a false bottom in this one. Now let's do the drawings here. Right? So this was last week, and look at this beautiful trend line. I mean, it's just perfect. A lot of traders would put it here, and that's not good because you're really not touching, or they'd put it here, and a trend line basically has 2 points, and then the third point is confirmation. But when I see this very, very steep move down, I don't like it. You know, and trend lines can fool you. So what I do is I use the most conservative way to put those 3 points together. And in this case, this is how it is. This is how it would be. So I would put this trend line the most conservative way that you can. And this is the break right here. And where would you get in? A confirmation in the bottom. You could have moved in here, but then you would have stopped out. Okay, then you retry again, and you get these wicks here. At least you know, okay, now we have a reversal. Now it's time to figure out where the bottom is going to be. Now that we had a reversal, here's where you want to enter the trade. I'm going to put my fib at the lowest part. Now you can do it either here or here, but this is actually the lowest part. So let's put it at the lowest part. And I know when I was drawing my fib the other way, I had it here, but let's put it here because it'll work both ways. Do the fib extension now. I'm going to start here. And remember this, we've seen the top here, but we haven't seen the bottom. So there's the A. This is the A down here, the B here. And now we're going to go down here to the lowest part. And that's your A, B, C. And your D is up here. So in this trade, you enter in this area here, okay, and you confirm that low, but you're actually entering here. And where is it? It's between the 23.6 and the 38.2. This happens all the time. So now your entry is anywhere in this area here where it's low, but here's the break right here. You get a nice big green candle right here. And this is an hourly candle now. And that's where you would enter that trade. So now let's see what happens. So this is real time, right? Yeah, this is real time. So the break is here. Beautiful pattern now. If we had a stop here, it would stop you out. But your stop really needs to be in this particular pattern. The bottom is here. But again, it's pretty far away. And when it's a lot closer, I'll use this here. But I don't want to lose all these points going down. And I'll put a stop here. And then if it's not the bottom, I'll test it again, lower, and then put my extension here. So in this case here, now it's really close to the 161. Now, the first take profit should be the 100 area. Then you let it go to the second take profit, which would be 125, and then ultimately 161. All right, so that's really it for this session. Again, I just wanted to mention it's a simple process. You don't have to complicate things, and it works. So if you need any help with fibs, I'm here, and if you're trying to figure this out, just let us know and we'll help you with it. So that concludes the webinar for today. Hopefully you took some value with it, and now you're hopefully more adept now with Fibonacci and entry and exits for futures, or other trades as well. Okay, guys, thanks, and we'll see you next time.